Hello and welcome to the Australian's Money Puzzle podcast. I'm James Kirby, the Wealth Editor at the Australian. It's Tuesday and we are looking at property. Now, specifically today, I want to look at buying a property in the thick of it, basically, in the larger metropolitan centres. And the hardest of all, and perhaps the most rewarding of all, long term, has been Sydney over many years, especially for investors, that's for sure. So today I'm going to talk to Judy Schmidt. She's a buyer's advocate and she's in Sydney, she's on the ground, and she's going to tell us basically what's going on and what you need to know about buying in metropolitan centres across Australia just now. Hi Judy, how are you?
Hi James, I'm good. How are you?
Good. Great to have you on. I've had a few different buyer's agents on the show from around the country. I find the buyer's agents just a slightly different perspective than a real estate agent per se, because you're not playing the same game, and maybe in some ways your interests are more sort of aligned, certainly with the buyer anyway. But it seems to me as Sydney is as difficult as ever. This is where you concentrate, obviously, Sydney. It's as difficult as ever. Is the market as tight as ever as it's been over the last year? Do you see anything changing, any lessening of demand, any more opportunities coming into the city of late?
Well, at the moment in the Sydney market, we're actually seeing quite a number of opportunities. It has been historically, as we saw last year, a little bit slower. And it's sort of just, we do have the stock out there in Sydney at the moment, but the buyers are still quite cautious. So what we're finding is it's actually a great opportunity if you are in the market for Sydney at the moment. There's some really good purchases out there.
When you say opportunities do go on, what do you mean?
What we're finding in the opportunities are, because those buyers are cautious, there is a chance for you to potentially get a good deal on a property because people are holding back still. They are a little bit more reserved and they are wondering what's going to happen this year. So that opportunity there is to really grab the property that you want in the location that you desire in Sydney.
Okay, I mean, I suppose it's one of the rare times where there are actually forecasts that Sydney prices could drop. We had Stephen Koukoulis on the show, who's an economist, a couple of weeks ago, and he's talking about price drops in Sydney. Louis Christopher is coming up on the show in a few weeks' time. He's from SQM, that's a specialist property research agency. He says there could be falls in prices, and the falls could be higher in Sydney than in Melbourne in the year ahead. So, and you're saying that there's a sort of reticence, right? So that you're saying that the buyers are restrained. Is that right?
Yeah, what we're finding is there are buyers definitely out there, but they are just a bit more cautious. They are sort of holding off to see, what is going to happen this year. There's so many questions up in the air, with interest rates, with any tax changes and that type of thing. So what we're finding is if you are ready and you are going, you've got your finances ready and you are looking for Sydney, you could potentially be in a really good position to, snap up a good opportunity.
Right. Okay. So you won't go as far as to say it's a buyer's market, I presume.
No, I wouldn't go as far as saying that. We would all love that, though.
Yeah. Pigs will fly on that one. But who knows? Maybe someday. But all right. So just looking at in terms of issues in the market, then when someone's in the market as a buyer anywhere in the major cities, as a home buyer or as an investor, a couple of things they should be aware of. There is a reticence, as you say, a little bit of coolness in the tempo of things because people are concerned about interest rates, for instance. Not so much concerned, but hoping they'll fall. And there's very mixed messages at the moment as to whether they will fall. They're unlikely to go higher, right? But you mentioned tax changes. I'm not aware of any tax changes look, I'm playing a game with you here. I am aware that there's rumor and speculation about negative gearing, but I'm not aware of any hard facts whatsoever about negative gearing changes. What are people saying?
Yeah, you're absolutely right. There's no hard facts that we can find out there at the moment, but there are those rumors. And having had those rumors there creates this, almost caution about people and how they go about buying this year and at the moment. So it is a quite interesting market. Sydney, there's definitely opportunity, which we don't generally come across often, where it's kind of been a little bit cool. And, because of these things that we are hearing, there is an opportunity for buyers out there. So it is very exciting in the Sydney market and as well as Melbourne. But when you come across to the other markets like Adelaide and Perth and Brisbane, for example, the stock levels aren't yet there. The buyers are still really strong, and from an investor's perspective.
Oh, right, I see. Sorry. Yeah, when you said the stock levels are there, so what you were saying was there's a healthy amount for sale in Sydney. Is that what you mean, and not in some of the other capitals? Oh, yeah. Okay. Right.
Correct. So some of the others, like Perth and Adelaide and Brisbane, the stock levels haven't really reached to where they usually are. So there's a bit more competition. There's, just the pricing to go into those markets are a little bit lower. So you do have more buyers there and more competition there. And we are still seeing that things are actually selling relatively quickly in those other markets compared to Sydney and Melbourne.
Right. Now let's talk about the sort of what, if there are opportunities, before we get into places, is there a type of property that that you see is just now useful? Is it one bedroom units, houses, townhouses? Is there something in particular where you see that opportunity more often?
Well, I'm actually seeing a lot more people wanting land at the moment, and that's something to really consider with this current market condition of, people being cautious and buyers not knowing what to do in that Sydney, Melbourne sort of market. So I think if you can afford and you have those finances ready and that is within your budget, definitely go for those properties with a block of land of some sort compared to a unit or things like that.
Right. And that's to do, well, obviously there's the traditional, basically, the core issue in property that the more land you have, obviously, right, the more you will do, the more potential you have. That's fairly basic, especially in a big city. But what do you think is really going on there? Are people, is it a swing towards homes? Is it that thing that the home is more important than it ever was post-COVID? Or is it people with an eye on development?
I think people are valuing more those existing dwellings at the moment, because once you start considering, how much these labour costs are and the material costs and all these things becoming so expensive to either build or renovate, people are more focused on those existing dwellings, and they're actually wanting the dwellings that are sort of set and forget, where they don't have to do too much to them. So that's their preferences, and that's what we're seeing at the moment. They're sort of really shying away from anything where you do need to do significant amount of work on.
Ah, right. So it's that terror of renovation. That's still a thing. Huh? It's funny because you get moments or periods in the market where like everybody's renovating and it's the thing to do, and fixer-uppers, and there's television shows about it, etc. I mean, they will always be popular, but there are times where it's even more popular. So you're saying that the worries about how much it costs to do something, or the inability to calculate how much it costs to do something, will you get tradies? How hard is it to get tradies? These are weighing up. It's funny, we had an economist on just a week or two ago saying that's improving, that the labour shortage is starting to improve, that it's coming back to normal. That doesn't seem to be obvious in your world.
Yeah, well, there's things take a little bit of a lag. So if you have someone that's potentially, about to settle at the moment with a fixer-upper and they're looking for someone to do some work right now, that might take them several months because they're not available for several months period of time. Yeah. So there's these types of things where, yes, it's great that we have more people coming in. However, we're still needing a lot more work to be done, and there's still things that can be renovated and improved and finished building on at the moment.
Right. Okay. Now tell us just about in terms of the market as it is just now. That was sort of like in terms of the structure of the market and what types of property. Do you want to zone in on where in Sydney you see opportunities just now? Where in the city?
Yeah. So we're basically seeing a lot of opportunities, in that sort of inner west areas. So things that are still relatively close to the CBD, as well as from an investment perspective, we're seeing a lot of great opportunities on those outskirts. So those southwest Sydney areas, obviously around that new airport where that's going to be built in 2026. So those types of areas, like if you're looking for that owner occupier in that sort of inner west close to the CBD areas, but if you're looking for an investment where you can potentially increase your yields by putting a granny flat on there or what have you, it's more of those outskirts of areas, especially that southwest of Sydney.
Okay, would you name some suburbs in the inner west and the outer west that come to mind?
Yeah, so at the moment there's great opportunities in Balmain and those types of areas and surrounding suburbs. So all those areas around there are always going to be relatively high demand because of the location. So that pocket there is, you're going to have great facilities that are being built there. Your transport links are fantastic, and it's just a really nice place to live. So close to the CBD, you're still relatively close to all the beaches and the coastline, and have that sort of inner west sort of feel and vibe. And then when you look at those investment areas as well, when you start to look around that Mount Annan sort of areas and those pockets around that southwest Sydney, they're still actually, kept their growth even throughout the so-called cooling of Sydney. So they still performed really well, and historically they perform quite well as well.
Do you tell us a little bit about the airport, the new airport, and what the property story is there?
Yeah, so the new airport is, we're all excited by it. There's going to be so much potential for employment. It's a 24/7 airport, so it's going to have so much going on there. The railway link up to St. Mary's is starting to be developed, and there's just going to be so many more housing opportunities for, lots of different people. So I think it's definitely something to keep watch on, definitely something for investors to look into as well. But yeah, there's definitely opportunities there, and we're very excited by
Badgerys
it.
Creek, what are the suburbs around that area then that you're thinking of?
Yeah, so we've got all the way from St. Mary's and down south into Badgerys. So you got the Ludnams and all those types of areas, and basically all around that catchment there.
Right. Okay. So that area is going to change dramatically.
Dramatically.
Yeah. Right. Okay. And there is that is sort of percolating through in the property scene now in your world. That's starting to be an issue, or starting to be seen as a prospect, is it?
Absolutely. There's more and more people starting to talk about those areas, starting to look at that. And as they develop all these train stations and all the major transport links to there, there'll be just more and more people interested in those things.
Okay, very good. Yeah, interesting. Every city has that. I suppose Melbourne has its version of it with a tunnel. A multitude of infrastructure projects, but the big one is a tunnel, basically, which is running parallel with the Westgate Bridge, which will open up a whole new area for property investment there. That's a kind of theme we should develop on the show and maybe look at again in the near future. Okay, we'll take a short break. I'm back in a minute. Hello and welcome back to the Money Puzzle podcast. James Kirby here talking to Judy Schmidt of the Advocate Buyers Agency. She's a buyer's advocate on the ground in Sydney. Now, Judy, one of the things that we're looking at when we look at the numbers, and you were talking earlier in the show about, in your view, it's a time in Sydney where it doesn't arise very often that the buyer has a bit more on the table, has a bit more power in the negotiations just now because the market isn't red hot, and it often is in Sydney for long periods of time. When we look at the clearance rates, for instance, the clearance rates are nearly back to normal, and everyone's getting excited about the fact that they've come back to normal. But standing back from it, in another way of looking at it, there isn't quite as much action in Sydney as usual. There's, as you said, a lot of stock on the market. And so to get rid of that stock, they're going to absolutely need those clearance rates to be in the 70% mark or something like that. So one thing you've been noticing is that for all that attention on the ground, the agents aren't quite as super confident as normal, and not everything's going to auction, for instance. Tell us a little bit about what's happening there.
Yeah, so what we're finding in the market recently, just in the last month or two, is that typically in Sydney and Melbourne, properties tend to go on auction. and they're quite successful, and they, go through their auction campaign and the properties are selling. What we're finding now at the moment is we're being approached by these selling agents and being asked, would you like to put an offer in? And this might be, after the second week of Saturday opens, where we're starting to see even the selling agents aren't as confident as what they typically are in a Sydney and a Melbourne market. So it is we're seeing it's quite a good opportunity for someone that is ready to purchase in Sydney and to potentially get the property they want in the location they actually want, because there is that buyer caution out there at the moment.
Yeah, it's interesting. One thing I often mention on the show about clearance rates is that clearance rates only tell you the clearance of what went to auction. It doesn't tell you what didn't go to auction, and it doesn't tell you the real mood on the ground. I mean, obviously, if clearance rates are shooting out the lights and they're 80% every week, well, then yes, you know that the market is red hot. But at the moment where you have this sort of mixed market, then the clearance rates aren't quite as useful as they normally are, because if someone decides, like you've just said there, not to go to auction and see if they can get bids in advance, that's never going to come up in the clearance rate numbers. It's a point worth thinking about, folks. Okay, very good, very interesting. I have some interesting questions. I think we'll take a look at them and we will be back with you in one moment. Hello, welcome back to the Money Puzzle podcast. I'm James Kirby with Judy Schmidt. We're talking property. We're talking Sydney in particular, and an unusual, perhaps a rare moment of opportunity, really, for both buyers, owner-occupiers and investors in the Sydney market, which doesn't come along very often. All right, some questions. First question this week is from Nathan. Nathan says, something your property-focused episodes have touched on is the relative affordability of buying apartments. After buying a one-bedroom unit in Melbourne last year, this plateau and the increase in migration and rent have given me cause for hope for a positive investment decision. Oh, well, I certainly hope so, Nathan. However, says Nathan, the federal government's consideration of changing negative gearing may be concerning. How do you see this property class faring given these factors? I think we just on negative gearing, it's really a process of elimination, right? So the government has tightened up on the personal taxes. They were going to be more universal, and they have restricted them and cut out people above 180,000. That was their first move on tax. Now, their second move on tax, many people think that that politically they must go at negative gearing or capital gains tax concessions. The reason I say politically is because the Greens have a lot of power just now in terms of Labour's ability to get things signed off or done. And oddly enough, the Greens aren't interested, it seems, just now in going near family trusts or frank dividends, which is the other sort of major issue on the table normally with taxes. That brings us back then to negative gearing. And they have said that that's the area they want change in. The government has said that they won't do changes in negative gearing. The problem, obviously, for us all is that we can't believe what they say on what they will and won't do anymore because of the changes to personal taxes. So that's exactly where we are on negative gearing. There are no announcements whatsoever. There's just a sense that in the political play in Canberra, for the government to get some things done, like the Help to Buy scheme, for instance, in particular, to get that through, the Greens have said they want some changes on negative gearing. So you might find that the government do something, and then they say they were forced into it politically by the Greens. That's in a scenario. It's as likely as anything else. But as Judy said a few minutes ago, Nathan, there's actually nothing else to go on. It's entirely supposition. So, be aware that the negative gearing is under question, but there's nothing in particular happening just now. Anything you want to add to that, Judy?
Yeah, look, I think, when you come to look at a potential property as an investment, it's something to take into consideration. I can understand for a first-time investor where a one-bedroom apartment may be quite attractive. It does tend to have higher yields compared to a 2 or 3 bedroom apartment, and it is an easier entry point where buyers can, potentially purchase a property at a lower point. I'm sure Nathan did his due diligence when he purchased his property last year, and he had that period to assess if this was going to be a good potential investment for himself. And anything that comes up in the years to come, we have to reassess our properties. We have to make sure that they're still performing as we would like them to perform. So if anything does change, or even in the next 12 months to 18 months, 2 years time frame, it might be a good exercise for Nathan to reassess that asset.
Okay. Yes. Yeah. Well, yeah, and it's a very particular one. There's always debate about the one bedroom. I think developers prefer not to build them. That economically it makes more sense to put out 2 bedrooms or 3 bedrooms these days. There's some other issues around them. Obviously, there's very little maintenance, which everybody loves. But then your capital gain is very, very restricted. There's only so much you can do with them. I mean, have you bought 1 bedrooms for people, and are there observations you'd make on the back of that?
We haven't actually. We haven't brought 1 bedroom apartments, and it's exactly what you said. So, the capital gains over a 10 to 15 year period is very limited, if any. We tend to prefer to use that amount on a better type of asset. Yeah,
Okay.
potentially with land or in another state where you're still getting your good yields plus your capital growth, like a steady growth level.
Right. So if I come into your door and I said, I want to buy in Sydney, I have $1 million to spend, and I can buy anything. I don't care what it is. I just want it to be the best thing I can buy. I don't care where it is. I don't care what shape it is. I don't care what floor it's on. What would you show me? Where would you start?
Yeah, I would definitely start in that southwest Sydney pocket with a house that has land, because when we look at yourself, if it's capital gains that you're looking for as an investor, that's going to help you deliver your goals in that property.
Right. Okay, very good. And it squares perfectly with what you said earlier, which makes sense. All right, another question from Mark. Look, Mark's question, I'll just read the start. A couple of questions about moving out of your home and turning it into an investment property. Every week, we have this question in a different guise. An enormous amount of people play with their home and their investment property, probably because they only have one, and it's entirely logical that you would do so, because what else have you got to play with? If you had $7 million investments in 7 different asset classes, I wouldn't be surprised to find you arbitraging between the two. So of course it happens in property too. But Mark, and to all the Marks out there, and this is never advice, it's always information, remember, the main thing in terms of any interaction between an investment property and your home is to keep it really, really clean. And one is your primary residence, and that's what you have for tax purposes. That one is a tax shelter. That one you don't pay CGT on, etc. The investment one is separate. It's tax deductible, no doubt, if you're negatively geared, which you probably are, and you keep that entirely separate. If you're moving between the two, if you're switching those arrangements, then the books must be very, very clear. I mean, it would make a lot of sense to do it, for instance, around July 1, even for yourself, so that you could keep the accounts really clear between what was happening. Because if you, in the future, an auditor will be asking what exactly happens, you've got to keep very, very clear notes on that. Do you deal with both owner-occupiers and investors, Judy?
Absolutely. Yeah, we definitely have a good mix of both. A lot of owner-occupiers in the Sydney market and your investors more in the interstate markets.
Right, looking to buy in other states.
Yeah, so typically investors are looking for that higher yield. They want to be as close to neutral as possible, and also looking at that potential steady growth over that long year period. So typically that attracts interstate purchases compared to Sydney or Melbourne.
Okay, just one last thing. Do you think people have become a bit more confident about buying interstate? There was a time it was seen as a sort of just a playground for very wealthy people. It seems to me now to be entirely normal and typical of even first-time investors.
Yeah, we've seen definitely a change over the last 2-3 years. More and more people are open to purchasing interstate. And when you show them numbers and help them understand, what that looks like for them and educating them to show them how that's going to meet their property goals, they actually can see the real logic behind it. And typically, Brisbane and Adelaide were the first two to be a bit more accepted because they're a lot closer. They're within reach. It was only an hour flight or a 2-hour flight. And now Perth is becoming more and more acceptable as well. Perth was sort of, 18 months, 2 years ago, if you would suggest Perth, people were a bit more hesitant on the east side. They were kind of like, well, I'm not sure, it's a bit far. But now they're very much open to it. And we can see the results in Perth as well.
Yeah, absolutely. I mean, really, how far it is neither here nor there. I would have thought, well, as long as it's inside Australia, it's inside the same tax administration, and the opportunities are clearly there. All right, very good. I think we leave it there for today. Thanks very much, Judy Schmidt, for coming on the show, buyer's advocate in Sydney. On this, great to get you on at this time where does seem to be one of those rare moments in time where there is opportunity.
Yeah. Thank you so much, James.
Thank you, Judy. And thank you, everybody, for listening to today's episode. A couple of things. Do keep those reviews coming on the Apple Podcast app. I do appreciate that. Thank you. And also, let's have some questions on anything you like. themoneypuzzle@theaustralian.com.au. Talk to you soon.